Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call again. Just got real volatility. I mean, we saw the indices down anywhere from 1.5 to 2.5% due to continued tariff concerns and what effect they might have on inflation, increasing inflation, slowing down the economy, so on and so forth. So a lot of anxiety in the market over that. So of that, we saw gold and copper prices rise, gold hitting a new high. Then we saw Treasury yields give back some gains despite a higher core PCE reading. Now, with tariffs, the White House did announce that they're rolling out a 25% tariff on all imported vehicles. Now, that's going to impact roughly about $474 billion worth of automotive products. Consumer confidence, that dropped to four-year lows off of fears of inflation, tariffs, so on and so forth. Housing market continued to struggle on new and pending home sales, even though they rebounded slightly, still remained historically low because of those higher rates that we're in right now for those mortgage rates. If we go overseas and we look at the UK economy, we did see bond investors see some relief with lower borrowing plans, and some retail sales increased over in Europe. In their economy, we saw the German business sentiment improve with manufacturing production rising a bit. And then the Bank of Japan hinted that their potential increase in that they would potentially increase interest rates. Now, this week, it's going to be all about tariffs and the effects that they may or may not have. Are they going to keep them on? So on and so forth. So it's all going to be about tariffs. The market is really focused on that right now. But we are going to have some economic data coming out. We'll be looking at the ISM number, the PMI survey coming out. The U.S. employment data will be out, trade balance figures, and some factory orders. We do have Fed Chairman Powell coming out, and maybe he'll give some relief in terms of refortifying everyone's confidence in the economy, even with tariffs. But they're still quite concerned. I don't think they want to hold their feet to the fire in terms of stating that the economy is going to go too much in one direction or another. I think they also want to see the effects of the tariffs and what it'll do to the economy, inflation, so on and so forth. But if we go internationally, we'll get some inflation figures coming out of Germany, the Eurozone, Australia. Their Reserve Bank is expected to keep interest rates relatively unchanged. And over in China, we'll be looking at some PMI survey results. They'll be announced this week.
Gotcha, Graham. Well, I had a question for you. I know that tomorrow is kind of a big day with some tariff information, and tariff day, or whatever they're calling it now. But like, what do you think that's going to do for the market, or how the market's going to react to that?
Well, that's a great question. I know everyone's anxious, everyone's concerned, and rightfully so. I mean, a negotiating tool for this administration, that's probably what it is. The effects that it's going to have on the economy, inflation, I think it's going to have all boil down to the extent of those tariffs and how long, and the retaliation of those tariffs being on with the international markets. So I don't think we're out of the woods, even though things are going to roll out tomorrow. I think we're just going to have to see. Keep in mind that he could come out and say, hey, listen, we're taking the tariffs off. Would that be positive for the market? I definitely think so. I don't know if that means we're out of the woods, because this administration seems to want to break some eggs as they make this omelet, if you like.
Gotcha. Well, also, I guess a follow-up question to that was how does I guess the general investor look at these kind of things on a daily basis?
Well, maybe you don't look at them on a daily basis. Maybe
sure.
That's the thing. Maybe look past them a bit. Understand what you're invested in and the effects that what is going on is going to have on your portfolio. If you're in a short-term situation where you need funds for an immediate need, maybe you keep a little extra powder on the sideline, extra reserve in maybe money market or bond, very safe vehicles, and not try to time this market. But for our intermediate, longer-term investors or that side of your portfolio, I think it's probably best just to look past it. It's going to be unnerving at times. It's going to be uncomfortable. So looking at it on a day-to-day, hour basis could maybe drive you a little bit nuts, if you might, in the short run as we're trying to figure out what's going to happen.
Gotcha. Well, Graham, we always appreciate the information and
You got it.
expertise. And thank you to our listeners. And check us out next week on the weekly wrap up. Have a good day.
Take care.